Because really that's what it comes down to, buyers for. It's payment. It's their monthly payment. How much down, how much a month? That's what most consumers think.
Welcome to the Wealth Builders Podcast. I'm so grateful that you joined us today, and we are really going to have a good discussion on real estate today. We've got one of our favorite guests and good friends, Bill Bronchick. Welcome, Bill.
Pleasure to be here. Thank you, Karen.
We're so grateful that you join us so often, and Bill has just got decades of experience, not only in investing, but on the legal parts of real estate, which is a huge blessing. And we're going to talk about the market, what to expect. We're going to look historically so that we can put things in perspective and just let you know like what the opportunities are in real estate right now. So before we get started, I do want to share with you our free download today is the top 10 secrets of real estate financing, how to grow your portfolio faster. And this is by our amazing founder, Billy Epperhart. It is a great book. And really, this is timely because as we go into what we're expecting to be some interest rate drops based on some of the things happening economically, financing is really, really important to understand. So you can just click on the link here below and we will send you a digital download of this mini book. Also, I want to let you know we've got the real estate conference. Well, actually, the real estate bootcamp is going on right now and you still have time to register. This is a free bootcamp. You definitely want to be a part of this and we'll give you a lot of information each night for 5 days in a row. So you can click on the link below and you can get all the back sessions as well. Then you'll want to register for the upcoming real estate workshop in October. That's in Denver. You can come in person or online and you can click the link below there to get registered. We always sell out with that for in person. So you want to make sure you take advantage of that opportunity and learn even more about real estate. All right. So Bill, we are in such interesting times right now. And one of the things I think people are trying to figure out is, okay, are we going to crash in real estate, or is this a time to buy, or what is going on? And so based on your knowledge, your history, paint a picture for us of what's actually happening in the market right now.
Yeah, I've been in the market for 35 years. I've seen 3 or 4 cycles come up and down. Are we looking at a crash to the tune of 2008? No, absolutely not.
That's good.
Real estate is local. It's always been local. And people look at factors like affordability. And I think things like that are just irrelevant because if you look at places like Los Angeles, San Francisco, or New York City, even at the bottom, it was unaffordable. So
yes.
That's not really a measure. It's simply 2 words, supply and demand. So are there more buyers than sellers or vice versa? And it's really comes down to market by market, not just the state, not just the city, but really neighborhoods. I mean, what's going on in this neighborhood? Because even if you look in let's say in Colorado, in the Denver metro area, what goes on in one neighborhood on the north side, the south side, the east side, the west side, the suburbs, they're all different factors. They're all different factors because it's a matter of how many homes are for sale versus how many buyers are in that market. Now, there are things nationwide that do affect that. Things like interest rates and tax policy will affect. So, for example, in the late 80s, we saw a big crash because they changed the tax laws immediately overnight. So things that were deductible and depreciable for a tax write-off. People were buying property simply for a tax write-off for no other reason, which is a foolish thing to do. And when they pulled the rug out from under those rules, it crashed, among other reasons. So we have favorable tax laws that have become more favorable now with this big, beautiful bill.
Yes.
That are going to be good for real estate. Nothing major, but they didn't take away anything really good.
Oh, that's good. Because they were kind of going to start to go after real estate investors. So,
there was worry about 1031 exchanges being eliminated. That didn't happen. They increased, at least for a couple of years, the mortgage interest and property tax deduction, called the SALT tax. So that's favorable. The only thing that we're really concerned about is where are interest rates going, because that affects demand.
Yeah, explain that, because
So if a buyer's in a market and has to pay X amount for a house, and houses prices are pretty high in most markets. So if they're saying, well, if I have to pay 7% for the mortgage, this is the house I can afford. So if interest rates drop, they could buy more house, or they can pay less for the same house and end up with a better payment.
Yeah.
Because really that's what it comes down to, buyers for. It's payment. It's their monthly payment. How much down, how much a month? That's what most consumers think. So if interest rates go up, then their payment goes up, and then they're less likely to want to buy and more likely to want to rent, and demand drops for the properties.
That makes sense.
Okay, and then sellers have to drop their prices accordingly. But at the same time, what we have is a lot of sellers sitting on houses with 3% mortgages who say, well, I'll just sit on a low payment and just rent the house out and take my house off the market. So supply drops along with it at the same time. Now, in recent months, like the last 6 months to a year, you see headlines in the media, especially social media. And it's always funny when you read a headline, then read the story and go, that headline had nothing to do with it. That headline was a lie. When they say, they use words like, scorching and, overburdened and mega giant. And so what we had is, for example, Denver metro area in 2004 or 5, we had about 25,000 homes on the market at any given time. And by 2008, 2009, we were up to 35. So it was way oversupplied.
Right.
Too much supply compared to demand, and that's what resulted in a crash. Then it went all the way down around 2015. It went all the way down to like maybe 2,000, 3,000, 4,000 houses it was floating around, which is way under normal, way, way, way under normal. Now we're probably floating around, anywhere between 12 and 13,000 homes, which is 300 to 400% more than the bottom, but we're still half of normal.
That's a really good statistic.
Right, we're still half of normal. So yes, it's evening out the market. We're seeing, and every market's different. I talk to people all over the country. And in some markets saying, oh, things are terrible here for sellers. And in other markets, like we're in Colorado Springs, things are pretty good for sellers.
Yeah.
Because a lot more people are moving in than are moving out. There's a lot of jobs here and there's a lot of growth. So it's different than, say, South Florida, which I understand is starting to soften up a bit.
Yeah, down in Miami and those areas.
So it's just a matter of supply and demand and the things that affect supply and demand. So for example, what affects supply? Well, how fast can you build homes and how cheaply can you build homes? If you start throwing contractors out of the country who are non-English speaking, or your typical people who run a construction site, then who's going to build the homes? Right. So policies like that aren't very good. There's not really shortage of land, but shortage of usable land. In Colorado, for example, water is the issue. Can we have enough water to supply new subdivisions? So we can have all the land we want, but if there's no water, you can't build homes.
Right.
And then it comes to things like inflation, the cost of materials, and people don't want to work. So if the south of the border typical construction worker who works on construction site is now in limited supply because they're afraid of being deported, you're not going to see 20-year-old white kids doing those jobs, not anytime soon, because they won't even work for $20 an hour at Taco Bell. What makes you think they're going to swing a hammer or lay a roof, for $20 an hour? So that cost goes up and then inhibits growth. So that limits supply because it's harder to build. Also regulation, California versus, let's say, Texas or Colorado or Nebraska, where things are a little different in terms of the, how hard it is or easy it is to build a subdivision.
Yeah.
The local regulations. So all these factors go into effect, but most of them, as we could see, are local.
Yeah.
They're not national.
That's true. What do you think, like we're sitting in Colorado Springs today, and then we've got the Denver market. It seems like the Denver market is getting softer. But Colorado Springs, I guess it has gotten softer where things are just sitting on the market longer.
Yeah.
But like, what's the difference between those two markets, or are they actually quite similar?
They are similar in some sense. It's a different type of person who moves to Colorado Springs or moves to Denver. Denver is very politically liberal, and Colorado Springs, is very conservative.
Yes.
And so, but what is attracting people in? Demand.
Yeah.
And how much room is there to build, supply, and so forth. So Denver Metro is much bigger than Colorado Springs.
Right.
And so many more houses. In Denver proper, the city itself, the city of Denver, seems to always be pretty good.
Yeah.
But as you get a little farther out in the suburbs, that's where things are starting to soften up a little bit.
Interesting.
Especially on the higher end, which most of new building is on the higher end.
So you were saying earlier when we were just visiting that Colorado Springs is expected to have 1,000 people move in.
No, a million.
Oh my
a million
goodness,
over
yes.
10 years.
Oh my gosh.
That's basically doubling the population.
It is. So what do you think, like with a community like Colorado Springs, why do you think it's being, like so many people are being attracted to it?
Well, it's beautiful.
True.
Look at the view of the mountains. It's absolutely gorgeous. It is, if you're politically minded, Denver is mostly California transplants. It's a very liberal kind of Democratic leaning, whereas Colorado Springs is a more conservative, religious town than Denver is. Colorado Springs is probably one of the only major cities left in Colorado that isn't liberal.
So do you think that's a lot of the attraction?
Yes, I do. I think a lot of people are moving from conservative states into Colorado Springs, or a lot of people who are conservative who've lived in Denver and said, I've had it, are moving down to Colorado Springs.
Wow, that is interesting. And that's actually like, if people would look at that and just see, wow, what can we do to maybe improve the community or help our community thrive? It's really interesting that conservativeness is really attracting the people to come in.
It is. And even in states like California, which is mostly liberal, most of the state is conservative geographically.
Yes.
It's just they're concentrated in Los Angeles and San Francisco and San Diego. But what we're seeing is even in those areas, especially that's where the big fight over redistricting is going on to get the vote, in favor of the conservatives. That's what they're trying to do. And both parties have been doing it for 50 years, so it's not any surprise. We're starting to see more communities there that are conservative, that people are moving out of the cities and into those more conservative communities.
Do you know the same thing is happening in Minnesota? So if you look at the state of Minnesota, which many of you know, that's where I'm from, that's where all my family lives. If you look at the blue, there's only very few little blue pockets, and the rest of it is red. But you're right, it's that concentration in our electoral system.
Right. Our brilliant electoral system, which the left wants to do away with.
Yes. And there's a community that is pretty close to where like our farms are and things, is called Mankato. And I was just talking to my dad, and he was saying that they are building like crazy commercial buildings, apartments. And so I think that same thing is happening there, where people are getting out of the liberal city. They're not really feeling safe, and they're going to those communities. And in that, if you tie that to real estate, Bill, and we didn't really talk about this, but that might be a really good clue where to buy.
Oh, absolutely.
Right?
Absolutely. What we're seeing is it's not just politics. It's also COVID changed everything because of Zoom. The work style, how people work is different. For years, people were moving into the cities to be near work, and now they're saying, well, I don't have to be at work 3 days a week or 2 days a week. I can work remotely, or sometimes 100% remotely. Why should I live in a crime-ridden city with the politics I don't like and the policies I don't like, where I can live out in the nice country with the better schools for my kids?
And usually it's less expensive even.
Right. So it was like a circle around. And if you remember, in the 1970s, I grew up in New York, and in the 70s, New York City was awful. It was terrible. And then everybody moved out to Long Island, where I grew up in the suburbs, or up to Westchester, because it was a better lifestyle, less crime, better schools, and so forth. And then this urban revitalization went along with Giuliani came in, and I know people have mixed feelings about him, but he did a great thing for New York City, which is he cleaned it up, cleaned up the crime, and people came back into the city again. And now we're starting to see the opposite again. We're seeing people are moving out of the cities and back into the suburbs, and now even super suburbs. The almost rural areas, not quite rural, but just at the far end of the suburbs, which is might be an hour from work,
Right.
Depending on where you are. That could be 5 miles, like New York, or it could be in Texas, that could be 40 miles.
Yes.
And so the point is, people are choosing that better lifestyle over proximity to their job because they don't have to be at the job all the time.
Wow. And so when you think about the opportunity that we have right now, this time in history, economically with real estate, is this the time to buy, which I think definitely we're going to see prices probably rise back up next week or next year with the lower interest rates. And if it is a time to buy, where specifically do you think people should start to look?
That's an excellent question. Whenever someone says, when is a good time to buy, it's always a good time to buy, because
true.
There's always motivated sellers with particular problems. Even if the market is hot, or the market is down, or the market is flat, there's always opportunities within pockets to invest in. Same thing with the stock market, of course. People who invest in the stock market will tell you it's dollar cost averaging. If you keep throwing money in, it'll go up and down, but in the long run it goes up. So it's just like the stock market. Real estate is not about timing. It's about how long you're in the market for. It's not how much time you're in the market for. For example, in the 1970s, when interest rates were crazy, people said, well, I'm going to wait for interest rates to drop. They would have had to wait a good 20 years for interest rates to drop. And if they did that, they lost 200% appreciation during that same time period. So real estate is not just about cash flow. It's about appreciation.
Yes.
It's about stability, like what neighborhoods are going to hold their value during the bad times. If it's just about cash flow, well, you could buy cheap homes in rural Nebraska or in Detroit, but those things won't be worth much more than you paid for them in 20 years from now.
You just get the $300 to $500 a month, maybe.
Yeah, that's it, right.
And then that's it.
Right.
And sell it for what you bought it for.
Right. And when you buy a $40,000 house and it costs $15,000 to replace a roof, that's a lot of rent to cover at $500 a month.
It is. That's a really good point.
Yeah.
So looking at appreciation, I think you've mentioned before that that's really where you make money in real estate.
Absolutely. Long-term appreciation is the most wealth I've built in real estate. And I made money flipping houses, and I've made money in a variety of ways in cash flow, but really just the buy and hold and the long-term appreciation is where you really build the wealth in real estate. So it's not a matter of, is it a good time to buy? The question is, can you survive the downturn? Because if you could survive the downturn, you'll always come out on top of the end.
Wow. So, there's people right now that are probably watching this that are looking at their real estate and they've been discouraged because we're in a downturn and maybe it's impacted them, maybe the vacancies with the rentals. What would be your advice to them?
Well, it's the same. Rental market doesn't necessarily move the same as the buy and sell market. Usually they're opposite. So in 2005, for example, I remember 14% rental vacancy, because remember they were offering these loans, these teaser rates for 1% for a year, and anybody who could fog a mirror can get a loan and qualify. So there were no tenants. It was terrible. Now it's gone the other direction. Now we have more tenants than we have landlords. So landlords are doing better and better and better. Now that's starting to slow down a little bit. My rents are not going up as fast as they were, but they're still going up.
Isn't that interesting? So just to end this with the downturn with the values, this is kind of what would be almost the worst time to sell, right? If you can weather the downturn, wait till maybe, are you seeing the increase coming 2026, 2027?
I'm looking longer term, like 2030, 2035, and that's what you should be looking at too. Not what's going to happen in a year and 2 years, because only Karnak if that's a reference for you older people, would know that, would be able to figure out, what's going to happen in a year or 2 years. But if we look at 10 years, it's pretty obvious that things are going to go up for the most part, with few exceptions.
Yeah.
And one of the things you mentioned too was, how do you know where to buy? Well, there's people a lot smarter than us who are buying long term or playing the long term game, like Walmart, for example.
Yes.
So if you see a somewhat undeveloped area and a brand new super Walmart, they're going to lose money for a few years, maybe as much as 5, because they know over 20 years they're going to make it back, because they believe that there's going to be long-term mass development in that area. And they have teams of professionals who are much smarter than we are to figure that out. So if you see a Walmart coming up, what you think is the middle of nowhere, you ought to think about buying property out there.
That is really good to look at, because they do the studies and then they know where the growth goes.
Right.
I think Starbucks is another one.
Starbucks is another one. They usually see Starbucks in the up and coming areas. And if you go to if you're in a smaller town, you want to go to your town meetings and see what's planned.
That's a great idea.
Yeah, see what they're approving in terms of permits or redevelopment or change of zoning, what they're looking at. And now these days, almost every city, especially the smaller ones, is looking for affordable housing and mixed use. So that is a play that almost anybody can do. If you can build affordable housing, which is a tough thing to do, because to build a subdivision with all that expense and then build tiny little homes, it's very expensive. If you go to the city and say, hey, I want to build this affordable housing project in this area, but we got a problem because there's not enough parking or the taxes are too high, you can work a deal with them. To make it out, just like Trump did, when he built the Grand Hyatt. They had owed 25 years of back taxes in the hotel, so he negotiated with the city to waive all of those millions of dollars and have no property taxes for another, I don't remember, I think it was 25 years. Wow. And that it resulted in millions and millions of dollars, which made a really bad hotel in a really bad neighborhood attractive to a company like Hyatt to come in and redevelop it and rebuild it, and it still stands there today.
Wow, that is so good. You've given us a lot of insight, Bill, into looking at the current real estate market, historical, what's going to happen, even places to buy. And that is really helpful, because history usually repeats itself and it doesn't lie.
Right, it doesn't lie. And don't be so concerned, I think, with the market as you should be concerned with the market that you're in. You got to know what market you're in so you know how to play it. But don't be so concerned with, is this the right time in the market versus can I find individual deals within the markets that I'm working? Motivated people, divorce, death in the family, job loss, foreclosure, needs work, things like that. There's always deals like that, where you can't do that in the stock market. You can't knock on your neighbor's daughter's door and say, hey, I heard you guys getting divorced. You want to sell me your Google stock?
That's so true.
You can't do that.
No.
You can do that with real estate, though.
That is so true. And Bill, one of the things that we do at Wealth Builders is we do Kingdom Real Estate Builders, which is our coaching program. And they get a free consultation with you, but also they get free access to your Legal Whiz. And in there, it is an amazing resource for all these things that you're talking about, especially finding people that maybe they're not on MLS. So if people want to check that out, we have 30-minute consultations that we provide for you. So you can go to wealthbuilders.org and then click on coaching to learn more about that. But that's also a way that you've got experts that come alongside you and you can really get to where you want to go faster. So Bill, you're an amazing real estate attorney. You do all other legal work too. So let people know, how can they get a hold of you?
My law firm website is bronchicklaw.com. That's for my law practice. I do real estate, I do asset protection, corporate entities, and so forth, and estate planning, pretty much. It's my limit of my practice. And I do business consulting as well as tax strategies for real estate investors. For the other stuff you mentioned, LegalWiz, legalwiz.com, it's WIZ.com, where I have a variety of online courses on all different facets of real estate investing, which, as you mentioned, is free, unlimited access to people who do the coaching program.
Lifetime access.
Yeah, lifetime.
And you update those all the time.
Yes. And I'm going to live a long time.
Oh, it's great. Bill, thanks so much for being a part of this. Any final words that you'd like to share with people?
Yes. Put your trust in the Lord. Don't be afraid. Don't rely on your own intuition, your own knowledge. I mean, you could read a lot of things that could sway you in one direction or the other on social media or whatever. But, trust in the Lord for his expertise and his direction. Okay. He will call you in the right direction and what to do, where to go, what to buy. You just have to be listening carefully.
So good. Yeah. That's so good. Thank you so much. And thanks all of you for being a part of the Wealth Builders family. We sure appreciate you. Billy and Becky send their love to you. They pray for you every day. And I just want to give you a reminder of our free download today, which is the top 10 secrets of real estate financing, how to grow your portfolio faster. So just click on the link below for that. Also, remember, it's not too late to be a part of the Real Estate Bootcamp for Wealth Builders, and you can learn more about that at wealthbuilders.org. And be sure to get registered for the October Real Estate Workshop. Bill will be there along with our other coaches. Billy and Becky will be there. It's going to be a great time, and it's always so fun to get together, to network, and to learn a lot about what's happening in the real estate world. So thanks again for joining us. God bless you and have a great rest of your day.